Okay, today we are going to be scrolling through without any specific goal in mind. The idea is that whatever I find randomly interesting, I will try to uh, deep dive into it and see where it leads. For instance, like to start with this one, I click this one. This one is on the banking system, Bangladesh economy, and like part of Bangladesh affairs. This should be like part four. And I could find like three other videos. The economy of Bangladesh, BD economy, the budget. I clicked on this as well. Lastly, we have something about how to develop stuff. Any case, I would like to go through some of it just to like have a basic idea of how these sessions are carried out. There's also this one that talks about BD economy, and like it does a basic job in defining stuff. What is the economic system per capita GDP, etc., etc., etc. And I'm sure like they go through different questions and answers, so it will be interesting to like go through them one by one. This as well. And lastly, we have, I just randomly clicked on this one, video online tutor. Like this is a good playlist as well. We have stuff like the geographical region, like geographical area, I think. Then we have the ancient civilizations, uh, how we won the sea, the liberation war, metro rail, something about the pre 1971 stuff, and like there's like geographical area, or geographical what, coordination, coordinate, I think coordinate is the word. Stuff like this, stuff like that, and it goes all the way to like the 26 videos. So in future time I can like see what this one like does or talks about, deals with. Okay, so this is a new insight that I learned, which is like the notes that we have. There are like two types of notes. One is government note, and another one is like the notes that come from Bangladesh Bank. So the lower tier notes, like one, two, or five Taka notes, are signed in by the government, and apparently the larger notes like the 100, 500, and 1000 probably is like signed on by the bank governor. Okay, about the word topsili and autopsily, I think one is by topsili we mean talikabhukto or registered, and autopsily is unregistered. So the distinction is when we like this happens as per the bank law 1991, I think. And in order to start your own bank, you have to at least keep 500 crore, I think, taka in the like what is the word? Okay, I was like trying to find the word reserve, but let's read this. To begin operations in Bangladesh, a new bank must have a minimum paid up capital as well of 400 crore. Okay, not 500 apparently. This capital must be held in an unencumbered form. Additionally, what is meant by unencumbered form? I don't know. Additionally, banks need to maintain a minimum capital required capital adequacy ratio (CAR). I have to understand like what CAR is of 10%, with tier 1 capital not less than 5% of risk weighted assets RWA. A bank must also adhere to cash reserve ratio CRR and statutory liquidity ratio SLR requirements as determined by Bangladesh Bank, which are currently at 4%, 13% respectively for traditional banks. Elaboration: paid up capital. The initial capital requirement for a bank in Bangladesh is 400 crore, as stipulated by the Bangladesh, not Bangladesh, but Banking Company Act 1991. Capital adequacy ratio CAR. Banks are required to maintain a minimum capital adequacy ratio of 10% of their risk weighted assets RWA, with at least 5% of RWA held as tier 1 capital. We'll have to elaborate on these as well. Cash reserve ratio CRR. Banks must maintain a CRR of 4% of their total demand total demand and time liabilities with Bangladesh Bank. I have to again, these are all statutory liquidity ratio (SLR). Scheduled banks in Bangladesh must maintain 13% of total demand and liabilities. Other consideration: banks must also establish processes for assessing and maintaining their overall capacity or capital adequacy in relation to their risk profiles. Licensing: no company can conduct banking business in Bangladesh without obtaining a license from Bangladesh Bank. Okay, I think this is like worthwhile to check, like all this, like starting with CAR, capital adequacy ratio, cash reserve ratio, and statutory liquidity ratio. All three of these are worthwhile investigating further. Capital adequacy ratio, CAR. CAR measures a bank's available capital as a percentage of its risk weighted credit exposure. It's designed to ensure that banks can absorb a reasonable amount of loss and are not at risk of becoming insolvent. So the idea here and the great thing about this in general is I got to revisit the Khan Academics playlist on this, and this was absolutely something I did not expect, and I am absolutely happy that I did, because here's the structure of a bank. So you start, and it is absolutely worthwhile to understand or know the internal structure of a bank, especially because it's not that intuitive form of an accounting balance sheet or uh, any economical way of looking at things would be from the consumer's perspective, but this is the de facto firms, or not even firms, but a bank's perspective is obviously counter perspective, like counterintuitive by definition. So here a bank, just like any other firm, and banks do share some similarities with firms, start with an initial equity, let's say $1 million. Okay, and the deposits here are basically the liabilities for a bank. So when we hear the word deposit, we think okay, asset, but for banks this is a liability. Okay, so we have 11 million in total cash here at this side on the liability and equity side. So we should probably have some not some, but we should have similar amount of asset as well. And here's the catch: we have to buy some like basic capital, right? We have to buy a house or operation site to operate from, so that is probably a bank's headquarters. So that should, let's say, cost about 1 million. And then we have, this is the introduction of a reserve. So the reason we need a reserve is because if everyone all of a sudden, like if someone from these pool of people, the depositors, the people with whom we have a liability, if they ask for money, we can use this reserve to pay them back, and it would not cause any trouble. So this is like, this has to do with solvency. We'll get to it later. But we have at the end rest of the amount from this 10 million to loan out to other people. These are called outstanding loans. And outstanding loans coupled with the reserve, coupled with the assets, the long-term assets that we have, are the total package of assets, should account for or like tantamount to 11 million as well. Then again, this video part 2 describes the same thing, and one additional thing that it describes is how do banks make money. By the way, they like loan out outstanding loan. They loan them out and get 10% in interest. And the people with whom they share a liability, the people who like deposited cash to begin with, they pay them certain amount of money, and this ratio has to be like 10% to 60%. Like there has to be some like the ask and buy. Okay, so this is how banks make money. They loan out money and get an interest, and they take loans and pay out an interest, right? So this is probably, we are familiar with bid and ask rate. So this is something similar. This video basically describes that same thing. And there's like other expenses which can be like percentile, like we can think of it as percentage as well, like overhead and percentage of fixed expenses, etc., etc. So at the end of the day, they have 200k in like profit, net income. These are interest income and interest expense in cash term. So what happens is that we start with 11 million of total liability and equity, 11 million asset. End of the day, we have here we have 1.2 million in cash. So remember the reserve that we had, 1 million worth of reserve. Add this 200k to that, and we have 1.2 million worth of cash. And as a result, the overall equity changes as well. 11.2 million in asset, also 11.2, like we have like this is how we come to the equity. This is how we calculate it. We have 11.2 million in asset, we have 10 million in liability, which is basically the deposits, and subtract this from this and you get 1.2 million worth of owner's equity now. And then we come to fractional reserve banking. This is again one of the key fundamental bank terms. So we start with 100 million worth of equity, and then like get additional 1000 worth of cash. We loan out the 900 after keeping 10% in reserve, and this 900 also comes back to us. Like here it is coming back to our bank, and once it comes back, we also keep like the 10% of it, and 810 we loan out. And that we loan out to people who are investing in project and they need money. They pay us back, and again, for the sake of this chain of thought, chain of for the sake of this for the sake of simplicity, we say that at the end of the day, 810 we are basically keeping as our cash deposit, like the cash asset. So the question is, what is like how much wealth has been generated? Not how much wealth, but how much money is there in this particular small economy. So to begin with, we have to contend with how we define money. So if we define money by the amount of gold, let's say, okay, and by the way, starting from video 3, these are not cash, these are just gold coins, like, right? Gold coins, like we someone most people, let's say, in the economy loaned the bank or kept the gold coins in bank, and the banks loaned out gold coins, etc., etc. So if we are defining money just as the gold coin existing in the uh, economy, we have to see that okay, 810 golds, 900 golds, and 100 golds. So in total we have 1,000 gold coins. So that is how we would define M0 money. So how much money is there in the bank? That's how we, like, this is the real underlying asset. Remember how we it will be shown in later videos how, like, with the introduction to bank notes, how we went from gold standard to like having bank notes. We used to have a system where the money or cash that we talk about used to be backed up by real underlying asset, a real valuable underlying asset. It's no longer the case. So if we define money as M0, this is what it is. And if we define money as M1, that would mean how much money is there in the checking accounts. So in the checking accounts, we have 810, 900, and like 1000. So in total, that is 2710. So this is the overall wealth that has been generated from just the actual physical underlying asset of 100 coins. We can like we can create a system where 2710 coins are in effect utilized. In effect utilized is how I would define it. And in video 4 they basically go through that, and it's a multiplier effect, by the way. From this to this is a multiplier effect. And the question asked is this wealth real? The answer to that is exactly would be real if the loans outstanding that the bank lets or allows other people to take, and these people are investing in different aspects. If these projects are even like not losing money and making up the original loan that these people took, then it is ensuring that in effect M1 is real and M1 is an actual amount of wealth. So it would be better if for instance like the amount of projects, if these projects make money, even more money that people can like keep in bank, that would mean that M1 money is even increasing further. But if they just keep at if they just break even and do not lose money, that would mean that M1, the wealth that we're talking about, is an actual thing, actual stuff. This M1 money or M1 gold coins in this case. And it would be even better if, like, say we had in this economy 1,000 apples. This is like the apple example. Apple is a form of wealth as well, and because like not because but a direct consequence of investing in these sort of projects allows for this economy to create, let's say now, 1,200 gold. There's also an effect where the uh, gold coins or cash it would required otherwise to buy a single piece of apple would diminish due to supply and demand, because all of a sudden there is now a greater supply of apples due to these projects working out. So there is a rate of how a society like would function, and especially how modern complex society or systems function, which is like if the supply of money is better or greater than the demand of money, it creates a certain effect, and vice versa. So that is basically how the initial four videos here dealt with the idea of basically a basic bank structure. And then in chapter not chapter but in video 5 it talks about banknotes and checks. I'm sure, like, I remember watching this lecture series some other day, some other time previously. It dealt with how there would be a need for central bank, like in as opposed to keeping reserve, they could like, I'm sure they Khan Academy basically described some scenario in which banks collectively decided to keep a reserve in a central bank. I think it helps in terms of overseeing and governance, etc. Then it is gives out loan without giving out gold. Reserve ratio, I think I will the next time I take a break, pause this particular recording session, I probably delve into this reserve ratio, more on reserve ratios, introduction to leverage, a reserve bank, treasuries, common debt, open market operation, etc., etc. So that would be the next thing on the line. So let me read the entire thing, which is like I asked, what is capital adequacy ratio, CAR? I think I'm going to remember CAR, but not the full form, capital adequacy ratio. It involves like a collection of tier 1 capital. So tier 1 capital is probably the most important one, and tier 2 is uh, equally equally important or like somewhat important. We'll see, equally or somewhat important, we'll see. But the idea is that the core capital, like, again, it is tier 1 capital is core capital, e.g. equity capital, and disclosed to reserves. So reserves is how much money it has on hand, and equity capital is how much money it started business with. We have seen the image from Khan Academy, like the square rectangles on top of rectangles. Then tier 2 is supplementary capital, subordinate debt, and hybrid instruments. Okay, so could these be forms of what? Options, like if things go haywire or sideways, or if there's a certain amount of panic in the economy, these securities can reap in or bring in money. So basically hedging instruments, perhaps. Risk weighted assets adjusted for credit risk. Loans and instruments, risk weighted asset. I probably have to understand or see how this one is calculated. But again, we are going to take a higher CAR is a good thing, like it has more cushion to uh, more cushion to protect itself from a blow in the economy. Basel 3, I keep hearing the name. Minimum requirement is 8% CAR. Bangladesh Bank is higher, etc. In Bangladesh, it is higher, which is like 10.5% to 12%. So this is the security. Does it specify at least tier one capital? So in Bangladesh, at least 5% of cash has to be in tier one capital. I don't know what the ratio is in tier two capital. Banks are required to maintain a minimum CR. Okay, no, not 5%, but a 10% of their risk-weighted asset with at least 5% are they held in tier one capital. We'll probably have to get around this definition as well, which we will do following. Okay, the statement banks are required to maintain a minimum CAR of 10% of the risk-weighted asset RWA with at least 5% of RWA held as tier 1 capital is to understand just this much, like the 10% requirement of CAR is basically this, and at least 5% must be of tier 1. So the 10% is basically tier 1 plus tier 2. So if a particular bank wants to keep more in terms of tier 2, they can, but at least they collectively have to surpass 10%, and tier 1 is basically 5% minimum. So you cannot go 6% here and 4% here. You have to keep at least 5% here. So that is the distinction. In addition to that, we have two other. Cash reserve ratio, CRR, is a percentage of banks total deposits that must be kept as reserve in cash. So we looked at cash reserves. So for instance, we get deposits 100 1000, not 100 but 1000, and we would keep at least 100 in cash. So that is basically the cash in the central bank, or perhaps reserve with the central bank, as a total deposit must be kept as a reserve in central bank. So perhaps in the later videos 5, 6 to 8, they talk about a different reserve in a central bank. So that could very well be the case, but I think it would be done so under the same principle as keeping a certain amount cash at hand, so that it doesn't go haywire. For instance, like there is some if all the large banks keep their reserve in a like secured bank, central bank, then if one particular bank is, say, for some reason suffering or liquidity or getting insolvent, that bank can like immediately take money, or the government can like pay that particular bank money, so there is not a over uh, widespread fear or widespread panic in the economy. So this is what it measures. One thing I did not understand is the NDTL, net demand and time liability. I don't know what this is. Total deposit a bank holds, demand plus time liabilities minus the deposits it has with other banks. So NDTL is something that I don't want to get into right now. I'll probably get into it when we look into banks income statement and cash flow statements from an actual uh, actual income and balance sheet, right? Financial statement, actual financial statement for a bank. We will get into it later. But what we have is higher CRR is basically less money to lend, contractionary effect on the economy, and lower CRR is more liquidity in the market, expansionary effect in the economy. So this is what it basically tells. Statutory liquidity ratio, SLR definition. SLR is a minimum percentage of NDL that a bank must maintain in liquid assets such as cash, gold, or approved government securities before providing credit to customers. Again, this is something similar that we are not going to do right now. It deals with NDTL. So NDTL probably is an important measure, and it one thing deals with liquid assets and the other thing deals with cash reserves at a central bank. So these two things are the only distinction. but more or less I think I got what I was looking for. About the reserve requirement for one bank to the central bank, this video is much more updated, May 3rd 2025. So I think this one is much more accurate. So 500 crore is probably the right answer, not 400 crore. Okay, and there are multiple types of banks. I think 62 types in total, but there are specific categories. So, for instance, one category he talks about is Bishishaito or specialized bank. So, a good rule of thumb, not rule of thumb, but a good mnemonic to remember, not even mnemonic, but a good trick, a hack to remember the names is basically there is a she sound at the end of it. Krishi Bank, Bangladesh Krishi Bank. I don't know if Bangladesh or just Krishi Bank, and there is Rajshahi Krishi Bank, and then there is Probashi Bank. So the she sound at the end is a good telltale sign. And there is government banks and non-government banks. Non-government, the word panijik so means business, and government business banks. So the government business banijik, I think just government banks are basically Rupali, Shunali banks like this, and the non-government ones are 44. So the Dutch bank, the banks, and all the other banks probably falls here. So the this is cool. This is neat. How is the government banks distinct from the non-government banks? The basic distinction is in the who pays the amount of money. So with government banks, the government pays the amount of money to central bank, and the non-government banks they have to pay their own equity, and not just their own equity but their own reserve as well. Also, there are foreign banks. So Habib Bank is probably apparently a Bideshi foreign bank. So is Ceylon Bank, Ceylon Bank. Okay. Okay. Few information on which one is the last bank to be listed. So or not listed slash registered, I guess. Citizens Bank is the last one. And how many banks are affiliated with or listed in DSC? I guess 31. That is a good uh, quiz as well. IFIC Bank served as Maldives Central Bank. Wow. IFIC. Okay, that is good to know. AB Bank, full form is Arab Bangla Bank Limited. AB Bank and IFIC Bank. I feel like watching the DSC chart on listed banks and like what happens, like which banks are doing good and which banks are doing terrible. Probably should check out the chart when I feel when I have the time. Okay, additional information. So the rate at which bank, the Bangladesh Central Bank, or any central bank for that matter, lends to the the registered banks. Okay, I am back. I think I was alluding to the fact that a bank takes loan. A bank pays out loans to central bank pays out loans to other banks at 4%, and the other banks pay out loans to the consumers at a higher rate, and the margin is what they use to pay their employees, basically pay salaries. Okay, these are some additional information. The first one is how many governors are there in Bangladesh Bank to oversee? Just one. There are deputy governors, four of them, and there are like others, nine. So like, how many people in the overseeing committee? Nine of them. So it's like worthwhile to remember. And how many years can they operate or like uh, sit in the main chair, for instance in the common chair or the deputy common chair? Just 4 years, 4 years worth of limit, like age limit, like for not age limit, but how many years is the maximum, what is the maximum amount of time they can serve? 4 years only. And age wise, they once they exceed 67, they are no longer eligible, and they have to like retire or something else, I guess. When was Bangladesh Bank established? 71, right on 16 December. Where is it situated? Motijid. So the building, this is the building. Located in Dhaka, Bangladesh, located in Motihil Central Business District. It rises to it is currently the fourth building, by the way, fourth tallest building. It used to be the top one for 27 year. City center apparently tops that. Let's check out what is city center. It's a skyscraper located in Motihil, Dhaka. It's the tallest building in Bangladesh. It is located in the heart of Motihil. Rises up to a height of 171 meters, 561 feet. The tallest building in Dhaka, Bangladesh has 37 floors, 10 of which are devoted to parking. Where is it though? Have I seen the city center? I don't think I did. I don't think I did. So this is it, and like, where is it? Motihil. So where would that be? Motihil would be Khilgaon. So this is Khilgaon. This is Rajbagh. This is Purvachal. This is so this is Baridhara, Gulshan, and Mohakhali. Okay, Mohakhali, I understand. I didn't know Mohakhali, Techgaon. Mogbajar, Shabak, and okay, nice thing, but I don't think I should have seen this, or it is worthwhile watching it on live feed. So let's just get into it. And there is also the training center is in Mirpur, and this is a special place, separate place where they print money, which is in Gazipur. And something else about I think he's going to talk about something else. There's a museum. Yes, there's a museum in Mirpur as well for the notes, I think. Who cares? Okay, another thing I forgot to mention was there was 10 branches, 10 branches for the central bank in, I think, 10 district areas. There are only, I don't think there are 10 district areas, are there? Not district, but division areas, are there? There's like 7 divisions. Do we not have 7 divisions? How many? This is so embarrassing. How many divisions in Bangladesh? 8 divisions. Yes, 8. Haga, Khulna, Rajshahi, Rangpur, Mymensingh, and Salem. Yes, the last one was Mymensingh. Okay, another another dose of some additional information. There are okay, the first thing to mention is the central bank doesn't take deposit from customers or normal people, ordinary people. And then we have like 10 variants of notes: 1, 2, 5, 10, 20, 50, 100, 200,000, and wait, what? This is 1000, right? No, this is 500, and this like 1000. So there are total 10 notes, and like this 7 from 10 to 1000 is signed on by the governor, and these 3, 1 to 5 is basically government notes and signed on by, I think, whoever operates or runs the foreign ministry, who knows. Okay, so the notes, whoever signature is on the notes, it doesn't matter. All notes are printed in Gazipur, and the central bank does few stuff. For instance, it publishes currency. I don't know what the English for niti is. Mudra niti, Bangladesh Bank, and things pertaining to tax, VATs, etc. are done by NBR. Then we have. Bangladesh Bank serves different roles. For instance, the reserve They have the reserve. So for the 500 crore that banks, commercial banks, not the commercial banks keep as reserve, are basically preserved in Bangladesh Bank. There was a there was a law passed in 2012 against money laundering, so it's also observed by, not observed, but it also maintained by, overseen by the Bangladesh Bank. uh, Also the Bangladesh Bank does stuff in terms of like fiscal and monetary policy, I guess. Like, wait, not fiscal policy, monetary policy, because they are the monetarist, I think. I'll have to check that. But last thing that it does is also the last thing it is worthwhile mentioning is the 4% rate CRR. We saw CRR, and we're seeing SLR. SLR, I think, has to do with, both of them have to do with like the liability and demand, time demand and liability, I think, uh, against how much cash we have, and like how much, what is the other thing, how much liquid asset we have, how much cash reserve we have, CRR, and like net demand, time liability. Like, we'll have to, what is this, I think it is worthwhile checking out right now. Okay, it represents the total funds a bank is liable to pay its customers after adjusting for interbank deposits, and it's used for calculating CRR and SLR. Breakdown of the concept: demand liabilities. These are payable on demand by customers, such as current account balances, saving account balances, overdue fixed deposits, demand drafts, etc. Time liabilities: these are payable after a fixed period, such as fixed deposits, recurring deposits, term deposit, deposits held as margins against loan, deposits with other banks, interbank deposits, etc. These are excluded because they are not part of the liabilities. Formula is basically NDTL is demand liabilities plus time liabilities minus deposits with other banks. Why are these are excluded? Because they are not part of public liabilities. Okay, I understand. So you have a current account deposit. A current account deposit, what is that for the bank? For bank, that is liability. Saving accounts deposit, also liability. Fixed deposit, recurring deposit, these are all liabilities. So you have 205 and 1000 point what, minus 50. Okay, 1000 minus 50, so we have 900 and NDTL. What does NDTL stand for though? Net demand and time liabilities. Net demand, demand and liabilities is basically, I'm going to refer to as net demand. It's demand, net demand, and liabilities, time liabilities. Okay, okay, I understand. Okay, now this is a list of government commercial banks. The biggest one is apparently Sonali Bank PLC. Then there is Janata Bank, Ready Cash Card. They pioneered, and the second biggest one, Janata. So the first one to start agent banking is Ogroni. Rupali was the first one to be enlisted in the capital market. Basic Bank, small commerce. So I think this is in a wretched state currently, according to the person who's like teaching. And then there's Bangladesh Development Bank. We broke down two bank and like created this one, Bangladesh Development Bank. Uh, so there's like Shilpo Bank and Bangladesh Shilpo Rin সংস্থা একীভূত হয়ে প্রতিষ্ঠান করেন. Okay, Development Bank. Okay, now let's talk about the specialized banks. Bangladesh Krishi Bank was established in 1973. রাষ্ট্রীয় মালিকানাহীন বৃহৎ বিষয়িত ব্যাংক এবং কৃষকের প্রধান উৎস. Okay, and then there is রাজশাহী কৃষি ব্যাংক, সর্ববৃহৎ উন্নয়ন অংশীদার কৃষি ঋণ সহযোগী অথবা প্রতিষ্ঠান. Okay, প্রবাসী কল্যাণ ব্যাংক, প্রবাসীদের সার্বিক কল্যাণের ব্যাংক, প্রবাসী কল্যাণ ব্যাংক. Okay. Okay, then there is three unscheduled banks, and the word is unscheduled, scheduled and unscheduled. I should have remembered the verbiage. Jubilee Bank was established in 13. Whoa, 13. And then there's Grameen Bank, and this one is popular for obvious reasons. the initiated operating I think in 1976, and then became a full-fledged bank in 1930 1983 83. Okay, and then there is like answer GDP, the VDP Union Bank. Okay, okay. Okay, banks and their previous names. Sonali Bank was known as the National Bank of Pakistan, the Premier Bank, the Bank of Bhavalpur, alright. Ograni Bank, Habib Bank, okay, Janata Bank, the United Bank Limited, Union Bank Limited, okay, and Wali Bank, the Muslim, okay, like apparently these are not important. Wali Bank, what Eastern Marketing, okay, Eastern Banking, who cares? And mobile MFS, Mobile Financial Services. So Rocket Watch was is from Dutch Bangla. Bikash obviously from Bragg, MyCash, Mercantile Bank, didn't know. Mcash only Islamic Bank, Mcash, okay. Surecash, Rupali, Spot Cash, Standard Bank Limited, Nogod, Post Office for Nogod. Nogod is for Post Office. Ucash is United Commercial Bank, okay. Okay, so the first Mudra Ain was 1835. The first person to actually use notes was Lord Canning, 1861. Okay, long time ago. Bangladesher প্রথম নোট চালু হয় is like 4th March. Like when was the first note to be published was 4th March 1972. And it makes sense that the coins would take a bit longer to start, because it like that to produce I think coins requires much more work, extensive work. International BDT. I didn't know this, like the paper that the notes are printed for 500 is from Germany. And by the way, this is like I kind of snided it that no one cares about Midport Jadughar, but apparently it's a nice place to find the old coins, which should be fun to like see. Okay, so apparently two things happened in like not two things happened, but like two periods are kind of important. So one is 1991 and the other one is 1998. So VAT started here, and so was Mukto Bazar. So 1991 probably is like Mukto Bazar, is it like share market, and then 1998 is when we got Kormosongsthan and like Boysko Bhata. That should be like important. I'm also kind of interested in like the 1970, not 178, which is like which one was the first non-government bank. I think the answer to is IFIC. Let's see if I'm wrong or right. And I was wrong, because the first one is AB Bank, Arab Bangladesh Bank. Okay, some important things. So when was the first 100 taka note? I think 4th March 4th 72. কোন মন্ত্রণালয় বাংলাদেশের ব্যাংক সেক্টর নিয়ন্ত্রণ করে? I think অর্থ মন্ত্রণালয়, the finance ministry. I think, isn't this the finance ministry? কোন বিভাগ? I think অর্থ বিভাগ as well. Let's see if I'm wrong or right. Okay, I was wrong about this one. So there is apparently 4 divisions of the অর্থ মন্ত্রণালয়, finance ministry, finance or commerce ministry, I don't know. So one is income, which probably is অর্থ বিভাগ, and then the other one is finance one. So that one oversees Arthik position basically, and we'll get into it. I think this is what the video is referring to. This video we'll see. It is overseen by Arthik position Vibhag. Okay, here are some tricky ones. Bangladesh Bank ekti kendriyo bank, Bangladesh Bank. So this is the reason why it's not a commercial bank is probably self evident, that we cannot keep deposits there. 183 Bangladesh Banker কাজ নয়. Which one is not a মুদ্রানীতি প্রণয়ন? I think it does it. আমানত সংগ্রহ, I don't think it does it because it's not a commercial bank. So ক. কেন্দ্রীয় ব্যাংকের কাজ নয় কোনটি? মুদ্রানীতি প্রণয়ন, yes it does. রাজস্ব, yeah, it doesn't do that. It does this, controlling or overseeing banking. আর্থিক প্রতিষ্ঠান নিয়ন্ত্রণ, it does that as well. Here's the right answers. Okay, so interesting question is Bangladesh Banker পূর্ব নাম কি? State Bank of Pakistan. Okay, some notes on here. So I think I made a mistake earlier when I said that like five people as additional. I think his fault. He wrote the five. He wrote the four as a five, much more like into five. So in total nine people and like 144. There's no female governor. There's been a female deputy governor, which is Nazanin Sultana, based. Okay, he is elaborating on this like নোটের বিপরীতে নিরাপত্তা হিসেবে বাংলাদেশ ব্যাংক রিজার্ভে রাখে which one স্বর্ণ gold. And so the idea is that if we are printing like 1.5 lakh, would have one body like I don't know 1.5 lakh or something else. Yeah, okay, who cares. Like 1.5, like 1 ounce probably tantamount to whatever like, x amount of money. And if you want to produce like x times 2 amount of money, you will have like 2 ounce in the reserve. If you don't do that, the currency is being devalued. That is the idea. So interesting one would be like Bangladesh bank note quality. So it's kind of easy to conflate the total amount of notes with bank notes. So bank notes are exclusively seven, and the 500 one is like Germany here. Like this guy is blocking it, but okay. And like how many times in a particular year does the central bank declare a Mudraniti? So is Mudraniti monetary policy? I don't know. So apparently like twice, 6 month interval. Okay, this one. নিচের কোনটি মুদ্রাস্ফীতি, like which one is not a tool to reduce inflation? I think if we produce more coin, that is not going to help. So the answer is C or Go. But is worth pondering with other options as well. Bank har bridhi, which is bank rate. Bank rate is like the rate at which the central bank would lend out money to other banks. So if we increase that rate, what are banks are going to do? Banks are going to increase that rate as well. People are not going to take out loan as much, but also people are going to save. No, people are not going to take loans as much, right? So when they don't take out loans, what would they do with the money? Like probably is nothing like that. They're going to just spend it. It doesn't help saving. It helps probably spending or something else, but certainly doesn't help saving. So they're not going to save. নগদ জমার অনুপাত বৃদ্ধি, rate of deposit increasing. What would that do? Like, yeah, sure, it could be used, but like how would you ensure it? This is like the outcome, not the process. We need a process. ঋণপত্র বিক্রয় কি খোলা বাজারে open market operation. So the nice thing is like Khan Academy is going to talk about it anyway. Wait, where's Khan Academy? Yeah, Khan Academy is going to talk about the open market operations anyway. So so if we are selling debt securities in the open market, what would happen? Debt securities in the open market is already inflated. Like, do people care? Probably they do. Probably this probably might be the right answer, like 202. I'll keep it bookmarked, and once I'm done watching this video, probably get into that. Certainly like both C and D seem like good answers. Okay, we are going to read this. Inflation and economic policies. Inflation, rise in the general price level over time, controlled via two main policy tools. Number one is monetary policy by the central bank. Number two is fiscal policy by the government, Treasury/Finance Ministry. Monetary policy and inflation central bank tools. The central bank, like Federal Reserve, Bangladesh Bank, or ECB, uses monetary policy to control money supply, create credit availability, and interest rates, which influence inflation. Goal: keep inflation with target range, usually around 2%. Key monetary tools: policy interest rates, repo rates. I totally forgot. I have totally forgotten what is repo rates. Rates go up, borrowing and spending goes down, lowers inflation. Okay. Open market operations, OMO. Buy sell government bonds to control liquidity. Selling bonds would mean that the money supply would go down and inflation would go down. Inflation has to do with money supply, it seems. So, for instance, the repo rates, policy interest rate, example repo rate. What is repurchase rates? I think repurchase rate is something when repurchase rates are when, what are repurchase rates? Repo rates are when one bank lends the other bank. Uh, when one bank lends the other bank, it could be central bank and central bank, not central bank and central bank, but commercial bank to central bank or commercial bank to commercial bank is my idea. I could be wrong and I'll double check that. So when they lend money with the intention of like lend money or lend some securities, I think they lend money with the intention of like taking that money overnight, like the within the next business day something. And open market operations, buy sell government bonds to control liquidity. Open market operation is probably something that the central government does. Cash reserve ratio, CRR. Situatory liquidity, statutory, not situatory, statutory liquidity ratio, SLR. Moral moral suasion or guidance. Quantitative easing in extreme cases. Examples: if the inflation is rising too fast, central bank may raise interest rates. Loans become costlier, less spending and borrowing. Demand drop, inflation cools down. If inflation is too low, central bank may cheaper borrowing, more consumption and investing. Inflation raises to target rate. Fiscal policy has to do with government spending, taxation. Government spending raises inflation, taxes reducing taxes raises inflation. Interactive monetary and fiscal interaction of monetary fiscal policy. The government is spending, overspending. The central bank might tighten monetary policy, e.g., raise interest rates. If economy is in recession, both policies might work together to stimulate demand, low rates plus higher spending. Demand pull, types of inflation, how central bank responds. Demand pull, excessive demand, tight monetary policy, and it kind of reminds me of managerial or marginal universities playlist on this. Okay, so this is the playlist I'm talking about. I think these videos do a good job in like highlighting that in the graphs, so it's worthwhile checking out. Things like demand pull inflation, cost push inflation, raising input costs, imported inflation, currency depreciation, built-in inflation, wage price spiral. Examples: bounce bank, food price shock, mess up. Okay. Does it answer my question satisfactorily? It doesn't. I feel like there should be an additional session on economic revision, and both like the micro and macro. So these things should be covered there. This thing, in addition to this playlist, I want to check out the entire playlist from video number 5 all the way to video number 25, 20 videos, because I want to recheck my intuitions or insights behind how variables like inflation or interest rate differ, and how bank, especially the central bank, like immediate or control or do stuff. Because I have totally I remember someone said this, someone had explained this in the following manner, that the government probably does some takes some actions. For instance, like what is, okay, let me just ask, explain repo rates and OMO. Let's see what it does. The repo rate is an interest rate at which commercial banks borrow short-term funds from the central bank. Okay, it's central bank, by selling government securities with an agreement to repurchase them at a later date. Central bank, how it works: a bank needs short-term liquidity. Okay, it sells government securities, treasury bills, to central bank. It agrees to repurchase them after a few days. So who is the seller? The seller is the central bank. Effect on inflation and liquidity. If repo rate is increased, borrowing becomes expensive. Result: less lending, money supply, and reduces inflation. Uh, if repo rate is decreased, borrowing becomes cheaper, more lending, and this and that. Excess repo rate 6%. Banks are going to worth bank. Open market operation, how is it different from repo? Refers to buying and selling government securities by central bank in the open market to control money supply and banking. Okay, this should, I think I should like remember, repurchase is like small bank selling government securities to large central bank, and open market operation is just the central bank selling government securities in the open market. How it works is when central bank buys securities, it gives cash to banks or investors. Like what happens when central bank buys something? When it buys something, it injects money, inflation goes up. Like I'm not going to read through all this, just inflation goes up. When central bank sells security, inflation goes down. Like a tap controlling liquidity, buying bonds, open market tap, or selling bond is closing the tap, less money in the supply. Effect on inflation. Okay, repo versus comparison. Nature: short-term borrowing tool, direct market operation. Borrower: commercial bank. Market participants are the borrowers. uh, Market participants, who would be the market participants? Consumer, customers, like consumers, would they be market participants? Sure, why not? Role of central bank: lender, buyer, seller of securities. Primary objective: adjust short-term interest rates, liquidity, control long-term liquidity and money supply. Collateral: government, yes. Securities, no. Collateral: outright transactions. Okay. What did I want to okay, this one, this one, this one. ওকে, নিচের কোনটি মুদ্রাস্ফীতি নিয়ন্ত্রণের হাতিয়ার না? So bank rate, if they increase bank rate, inflation would go down, so this is not it. নগদ জমার অনুপাত বৃদ্ধি, if people save more, but this is talking about the outcome, not the process. Open market securities, OMA operation, where the government sells securities. When the government sells securities, cash comes in, right? When the government sells, like this the tap analogy, or when sells security, closes the tap, less money in the system, and guess what? Inflation is going to come down, would it not? Yes, it would, right? It literally reduces, selling reduces inflation because cash is going to the government. So this one is, and like question is like a negative question, which one doesn't? This one controls inflation, which one doesn't control inflation? This one doesn't control inflation. And okay, now it all makes sense. Like নগদ জমার অনুপাত বৃদ্ধি, if we save more, that would help inflation, but what wouldn't help inflation? This one wouldn't help inflation. Makes sense. So bank rate, we now know about bank rates. কেন্দ্রীয় ব্যাংক যে হারে বাণিজ্য ব্যাংকের লোন দেয়, ব্যাংকের হার bank rate in is বাণিজ্য ব্যাংক. Okay, you know this much. Current bank rate is 4%. Treasury bill issue করা হয়. Treasury bill, which treasury is government, treasury bill get into. Okay, let's okay, so what is the full form of CRR? Cash reserve ratio. So it is worthwhile remembering that it is ratio. What is the CRR rate? 4%. And SLR rate, what is the SLR rate for them? So it's 13%. Okay, so the place bankers meet to settle their mutual claim and accounts is known as clearinghouse. So the place to mediate but settle the mutual claims and settle their account, etc., is clearinghouse. And Place where Bangladesh Bank cannot operate is Sonali Bank takes that place as a placeholder. And if there is inflation, mudra currency depreciation or inflation, in other words, রপ্তানি বেড়ে যায়, more people want to buy from you. So answer should be no one. Let's check. Okay, so if the export increases is not in the like total options out of 4, then we have to go to the next best option, which is like um, import reduces. So which law dictates basically the dictates slash controls the banks that are in action or that are in operation is Bank Company Act 1991. Which was the main purpose behind Money Laundering Act, কালো টাকা সাদা করা? Okay, প্রধান উদ্দেশ্য. Okay, so the main intent was to stop people from lending. That was the main issue. And these are like useful secondary goals that just happened as a byproduct. Okay, নিচের কোনটি তফসিলি ব্যাংক না, which is not a scheduled bank? A Bragg Bank and Grameen Bank. Grameen Bank is associated with like small debt, small loans, right? So this like has to do with like it is very well known that this is not a traditional scheduled bank, and Bragg Bank is basically an NGO, right? So and also like Bangladesh Koti Baniji Bank রয়েছে. Commercial banks, just 3 specialized banks in like if we subtract the total bank of the 3 specialized banks from the total amount of banks, we are left with how many commercial banks there are, which is like 59, not 58. Okay, so what is the basic amount of equity one bank should have? Digital bank স্থাপন বাংলাদেশের ডিজিটাল ব্যাংক স্থাপন করার ন্যূনতম পরিচিত মূলধনে কত টাকা নির্ণয় করতে হবে? Okay, so paid in capital, this is like talking about paid in capital. So what is paid in capital and who do we pay it to? Good question. Paid in capital is when we go to enlist. There's in the stock exchange, that is where I think the paid in capital comes in. But Bangladesh digital bank স্থাপন করার জন্য I think it's referring to central bank. So 125 crore, that is the number that we should keep in mind. And which one is not a commercial bank? Again, is Krishi Unnayan Bank, specialized bank, not a government bank. And the reason, like a government commercial bank, which is not a government commercial bank. Sonali is definitely, Rupali definitely, Janata definitely, but Pubali and is like gets mixed up. That's why like it's important to highlight or accentuate that. Okay, which one is both government and non-government? Rupali Bank is what while remembering. What else about Rupali Bank? Was it the first bank to be enlisted in the stock exchange? We'll have to see. 2 banks submerged or merged, just merged. BSB and BSRS to create Bangladesh Development Bank, BDBL. Okay, the first one to try out mobile banking, mobile finance service, Dutch Bangla, Bank for Police Community, and that's it. American Express credit card. Citibank was the first to open American Express credit card. We should probably know more about that, like what does it do that other credit cards don't. When did Bangladesh First Islamic Bank was established in? I think it was 83. And total Islamic Bank is I think 11. Let's see. 1183. Okay. Islamic Bank, that would be my idea. Islamic Bank, yes. Nisha Konti, wait. Bideshi Bank, I think the question is like Bideshi Bank, Habib Bank. Yes, this is Habib Bank, which is not a Bangladeshi bank, Habib Bank. This is an interesting slide because which bank started the Mastercard first? That is Standard Chartered, and then the other one, I think the Citibank started American Visa service, like something like that, Visa card or something, right? So it would be interesting to see like the purpose of a Mastercard and a Visa card, etc. Bangladesh Bank, Commercial Bank of Ceylon, I should have remembered that. And apparently there are 9 banks that are foreign banks operating in Bangladesh. I need a list of that as well. Okay, this is একটি বাড়ি একটি খামার 1998. And then the একটি বাড়ি একটি খামার প্রকল্প পল্লী সঞ্চয় ব্যাংক 2014. The answer I think is here. And like Bangladesh Grameen Bank related dates 76 and 1983, 2 dates to remember. Okay, so interesting part is like bina jamanote, I think without any collateral, that is what they mean is Grameen Bank. I didn't know that. I know, for instance, the general idea is that you have to show some collateral and like have to show some amount of credit status to get loans, but apparently these banks, these people can get loans without any direct collateral of that caliber. And something about Dr. Mohammed Yunus, like his village was Bathua, okay, Iraqi Baath Party Bathua, Jobra. And how would I remember this? Jobra fan, okay, sure. Okay, একটি বৈধ চেক এর মেয়াদ হলো 6 মাস বা 180 দিন. Didn't know that. I thought like it is a good thought experiment, like when does a check expire? Apparently 6 months or 180 days. LC, letter of credit, I know this much. Related to import and export, LC. So who issues LC? Banks. কোন ধরনের হিসাব সর্বনিম্ন মুনাফা দেয়? কোন ধরনের হিসাবে গ্রাহক কোনো লেনদেন করতে পারে না? I have no idea what these are. So let's hear him explain. Okay, so these are like the 3 accounting types, not accounting, but 3 deposit types. For instance, it could be a running deposit or like a checking deposit. I think this is what it means, cholti, that you just keep your cash because you don't have anywhere else to keep it safely. And then there is like saving accounts. Saving accounts are basically saving accounts. You save, there's like a minimum amount of money involved, but you can, I think, withdraw anytime you want. And then there is fixed, you cannot withdraw. So the lowest amount of no interest, I think the cholti one. Shorbonimno munafa, I think the lowest interest is also cholti, and then sonchay, and then fixed. And which account from which you cannot withdraw is sthay account or fixed one. Yay. And the last one, which one is Delia, and the, I think, bankruptcy, the institution that cannot pay back its loan. And to that, I would say like there is a philosophical thing to be wondering here or pondering here, which is much of the economy or much of the health of the economy or much of our perception about the system of money, especially I'm talking about the M1 money, which is tangible only and only when the projects are the projects that banks lend out money to really works and generates some amount of generates the outcome that also covers their cost. So only when that this is the game, this is the circular game. Only when these projects work do we get to claim that the M1 type of money, the wealth, actually works, especially given that especially given the structure that we are currently in. For instance, we are no longer in a gold reserved or gold backed system. We are in the dollar based system currently, and the dollar is basically guaranteed by the country itself. In the case of USA, that is the government. Like, you have to have faith on the US government that the money is not going to go haywire and the system is functioning. Basically, the money, lots of it is basically just contingent on the system being functional. So once there is disruption, you can see like why a country, why money is important, or why long-term growth, or most of the things that we cherish about an economy is important, and how it works. Like, if the country is not functioning properly, and all the current projects that have been undertaken to give fruit do not work, then society immediately struggles. And that is a direct consequence of fractional reserve banking, and like the multiplier effect, etc. Multiplier effect on money, etc., etc. Okay, last of the slides. BEFTN is Bangladesh Electronic Fund Transfer Network, which is basically how you send money from one bank to another one. And then, like, how many agent banking system in Bangladesh? 31. Okay, so this is the second video, and I contemplated not seeing this, but then again, it would be a total hole if I see this video and perhaps even this video after this and finish it up with this. But I don't think I'll get that far. I'll just, quit today's video with this. And it talked about the strongest aspects of our economy. So two facets we need to contend with. Number one is kর্মসংস্থান, workplace, and the other one is remittance, like getting dollars from foreign dollars, like foreign countries, right? So these two facets are the lenses through which we should be observing the existing state of Bangladesh economy. So makes total sense that the government wants to focus on RMG. 80%, 84% of our export is from RMG, and there's like 60 lakh people affiliated with this. Then there is agro, 45% of the total population. So around almost 50%. So 17 million people live in Bangladesh. So by that count, we would have at least 9 million people, and like 11% of the total GDP, I think, or the total profit that we generate basically comes from agriculture. Then there's remittance, and remittance, this I kind of understood the use of remittance. So for instance, remittance goes to China for like working in the Podda Bridge, and then there's like metro rail was something that was worked on by Japan, and we have to pay them in dollars because they were not going to accept Bangladeshi taka. So once the people from outside send remittance, this is where it goes. And last year, I think the stat he gave was almost 1 million people live outside. So that's like 40 lakh, even higher than the RMG sector affiliation. And they sent around, I think, what was the number? Remittance number in Bangladesh last year. $26 billion. Okay, 26 billion. Sector 26 billion. And then there's like chamra and textile, home textile, and part. And chamra and textile both 1 billion, and part like went below 1 billion. Okay, we are going to see percentage of export with respect to different countries around the world. We are also going to see percentage of import cost, and lastly we're going to see percentage of remittance. So This is like the percentage of import income. So most import, I think this is due to RMG, is from US. So 34%, 28 billion in total is from, sorry, I did I say import, I meant export. So 38% from USA. Germany, another key figure, is 12 billion, which is like around 11 to 15%. United Kingdom, UK, 9%, 9 billion. France is 8%. And then we have Spain, 7%. France, Spain. So these are all top tiers. Like we are exporting Italy, Netherlands, Canada, Japan, India, rest of the world. Yeah, we export to high-end countries, and most of them are USA leading export market around 34%. Germany second, around UK, France, Canada, Canada. Together, the top 10 destinations contribute approximately 70 to 75% of Bangladesh total export. Right, medium. So let's check this one. Okay, and then we have analysis and implication, high concentration risk. Okay, so there is a concentration risk, heavy reliance on US UK markets exposes Bangladesh to fluctuations in global demand and policy changes, e.g. tariffs. Okay, diversification efforts. While there are notable gains in non-traditional markets, India, Japan, Australia, they're still small. Main export commodity, over 80 to 85% exports of ready-made garments. So what would be the other 20%? One would wonder. What the other 20%? What are the other? Jute products, leather products, frozen. Okay, so there's like leather and frozen food, especially shrimp, pharmaceuticals, agricultural goods. Okay, makes sense. Balanced export landscape for last year is, okay, top 20 import sources fiscal year, and number one, the most important country, is 26% of our import, and 14%. Why Bangladesh and China? Bangladesh. So why China and India? I think predominant reason for that is the geographical proximity. Then there's Indonesia. I think most of the labor goes to Indonesia and Saudi Arabia. He's going to mention it. He's going to mention, yeah. Oh no, not Indonesia. Malaysia and Saudi Arabia, not Indonesia. My bad. Then we have Brazil, Malaysia. Here is Malaysia, USA, Singapore, Qatar, Japan, etc., Germany, Canada, total. China is the largest supplier by a wide margin, 26%. India follows at 14%. Southeast Asian and Western countries each contribute between 4. A diversified mix of smaller partners make up about 30% of total spend, import spend. Well, the import structure indicates a reliance on industrial materials, machinery, petroleum from China, India, and USA. I think he mentioned that we have to import what? Stuff like shuta, so we can make RMG and then export. Import, no, sorry, then export it, yes. Total import reached approximately 63 million, up significantly over year to year. Okay, Citadel. Let's go and check out Citadel data. While Bangladesh trade balance with the rest of the world, Bangladesh trade balance, the difference between export and retail services is 4.7% of GDP. This means that import exceeded exports by 4.7% roughly. And according to him, we covered this gap by remittance. Such that the frequent borrowing or foreign currency reserves may be used to finance this gap. However, a narrow deficit compared to previous years was indicated. Okay. The merchandise good trade deficit was about 14 billion. the in GDP term, Bangladesh GDP 4.7 4.8% of the gap. Remittance income earned for Bangladesh. Here's a breakdown of that. Quarterly remittance breakdown: January to March, fiscal year 2023. Okay. UAE is 20%. USA percent of remittance is 13%. UK 12%. KSA Malaysia 8. Okay. Gulf region, GCC, the Gulf region contributed like 47%. EU like 18%, and Asia Pacific including Malaysia, Japan, and etc. 10%. So Gulf region is really important in terms of we sending workers. So we send workers to UAE and even Saudi. Annual contingent remittance registered around 23.9, almost 24 billion, as we saw here. Oh, sorry, not here, in the previous search. Summary: across the recent quarter, 21% from UAE. Okay, makes sense. Okay. Distinction between the two income sources, or like two ways of conceptualizing the income. GDP deals with only the people that are internal to the country, and GNI, when we talk about GNI, we add remittance, which includes the totality of GDP and people like living inside, as opposed to no, not yet, as opposed to including people also that are living outside. In total, subtotal, they are considered as considered in the GNI calculation. So apparently there is a report from, okay, it just went blur, EPB, economic, I don't know what the thing was. Okay, Economic Promotion Bureau Bangladesh, Export Promotion Bureau Bangladesh. So they publish a report, Pocket Export Statistics 2022-2023. We ought to check this one out. This was lingering from the discussion about import and exports. Okay, another thing is that we consider GDP as our country's income. So 55 lakh 97 crores, I think. So 15% of that is what the government wants, right? So I had no idea. I never thought to ask myself like, what percentage does the government want from the total income? So apparently they want 15%, which is like 7,97,000 crores. I think I forgot to mention thousand here. Nice, neat. He mentions core GDP, which I assume is income tax GDP. So as a percentage of GDP, we only give 9%, and he mentions America giving out like 38% something. So one thing I would mention is they get healthcare benefits and all sort of other benefits, that social security stuff like that, and we don't get that. So that might be a underlying reason for why we pay less. Okay, different sources for export, not just export but economical data. So number one is budget. We will check into that. ER, economic review, অর্থনৈতিক সমীকরণ. So this is, I don't know what this is, whether this has a dedicated website, but this is something that we review and something that we should keep tabs on. Then we have BBS, Bangladesh Bureau of Statistics. This probably is one of the main source of all the statistical data that Bangladesh offers. I am very much not familiar with the website. I wish there were more people reviewing it. Bangladesh Bank, and then EBB, something that I mentioned a moment's while, is I think Export Publication Bureau or something like that. Raptani Unnayan Promotional Bureau. Very interesting, like two observations. Number one is I didn't know, I like misrepresented what was open economy. So open economy is like we are allowing products from other countries to enter our country, and we are competing with them in a free market, like open market, free open market, right? So 1991, this was in the Zia regime, and this was the first time where we allowed other products to compete with us. and we got like as a byproduct of which we can now use other products like some from soap to shampoos to different things that we use, even in with respect to telephones, phones. So it's possible, but the downside to which is also obvious, which is like our local brands suffer sometimes. So that is something. Also, the other observation is why is agro sector kind of important, like forget, never mind the 8 crore people that are involved in it, 8 million people, never mind the 11% of the income of total GDP, like 11% of the total GDP that we earn is from this sector. Never mind that. Never mind also that 45% of the people of the total overall population is affiliated with this, connected with this. One thing we do is we can self-serve. For instance, we do not, I guess, we do not rely heavily on other countries for food. I could be wrong. Like, what do we import from China the most? I have to check that one out. Okay, Bangladesh's top import from China is textiles and textile related products, including fabrics, yarns, and clothing items. So we are not importing rice or food elements from China. This is good. And it was overseen by, not overseen entirely, but it was kind of orchestrated, what is the right word to use here, it was mediated. I will use the word mediated. It was mediated by WTO, World Trade Organization, and because this was the first time foreign products were competing with our local product, this was the advent of VAT as well. Okay, there is some things about lower developing country status for Bangladesh, and he will get into it later, so I'm just going to wait for that. There are some talks about how WTO কর্তৃক পণ্যের শুল্কমুক্ত পরিবেশনকে বলে Generalized System of Preference, GSP, and the ছাড়া অন্য প্রতিষ্ঠান কর্তৃক GSP Plus is for European Union. I am bit I don't quite understand well this portion, so I'm going to wait for either him to like elaborate more on this, or like we will do some future research, like kind of getting guessed out here. Lastly, জাতীয় icon GDP খাত. So there are like 19 sectors from which the 19 sectors, so the count of GDP is divided into 19 sectors, is my understanding from this. Let's see what he has to say. Okay, yeah, finally he gets into it. So there are like 3, or not 3 but 4 trenches. The one that is at the bottom, although ironically it is at the top here, LDC, least developed, and then like developed country, DC, and in the middle it is segregated into like lower middle and higher middle. So Bangladesh in 2015 got here, and the date it got here is like 1 June 2015, doesn't really matter. And this process by World Bank is assessed every 3 years, so 15, then 18, then it didn't happen due to corona in 2021, happened in 2024 and will happen in 2026 or 27. But the catch is, if Bangladesh maintains the level of GDP growth or level of performance that it had maintained previously, by 2026 we are going to get the final graduation. So we will officially get out of least developed countries to lower middle, right? And the Bangladesh target for DC, or like developed country, is 2020, not 2041. And the answer to this one I think is neither, because like now it's 19. Also something neat, Jatiyo I is not GDP, is GNI. And GDP is like the domestic version of that. It's worthwhile keeping that in mind. Okay, something about Inclusive Development Index, IDI. I could not actually find the overall ranking. Yes. So the Inclusive Development Index, IDI, is a framework that assesses a country's economic progress beyond traditional GDP metrics, focusing on factors that contribute to a broader societal well-being and sustainability. So I think I like the definition given here better. Introduced by the World Economic Forum, WEF. What is the World Economic Forum? Definitely not the same thing as World Trade Organization, and it was introduced in 2017. Measures how equitably a country's growth benefits its citizens and not just the overall GDP. It assesses three main decisions: growth and development, economic prosperity and productivity, inclusion, distribution of income, poverty reduction, and social mobility, and lastly intergenerational equity and sustainability, environmental stewardship, debt and future opportunities. So three stuff: growth and development, inclusion, integrate intergeneration, not integration, intergenerational equity and sustainability. Total country covered are 107. Top performing countries are countries like Norway, almost 7, Iceland, Luxembourg, Switzerland, Denmark, Sweden, Netherlands. Like Nordic countries, one thing they have in common is what? Is they are homogeneous, and they are almost socialist, not entirely, but they have social programs that help distribute the wealth accordingly to their citizens. Ireland, Austria, Germany, Belgium, Slovenia. Where is USA? What is the code for USA? Bangladesh scored 3.98 and ranked 37. What is the score for USA? USA. The score for USA is ranking 23rd. It does not mention score, but okay. What is for China? China is 26th. Shouldn't China be more closer to the top, because China is essentially a socialist country, as opposed to Russia is 19 ahead of China, Brazil, India, South America. Wait, what? How come Bangladesh is 34th? How come Bangladesh? Uh, Bangladesh is 34th. Whoa. And it shows Nepal is closer to Bangladesh, and India is like really at the end. Yeah. On the scale of 1 to 7, Bangladesh scored 3.98 in the IDI, with 1 being the worst and 7 being the best. India scored Pakistan scored 3.55, Sri Lanka 3.79, and Nepal 4.14. The annual assessment of 103 countries, now 107 countries, economic performance that measures how countries perform on 11 dimensions of economic progress in addition to the GDP. It has 3 pillars: growth and development, inclusion and intergenerational equity, sustainable stewardship of natural and financial resources. Someday I will read more on that, but not today. Okay, so the total GDP is 55 lakh 97,000 koti for the fiscal year 2024 to 2025. And also, just one thing to mention is the reference year change from the earlier books would say 2005 to 2006, and now it says 2015 to 16. And then we have the per capita GDP, which is 2675 mark in dollar, which is closer to, he did the calculation, 2,94,000, and the per capita GNI is 2784 US dollar, which is closer to 3,04,000. So the 3,04,000 and like 2,94,000 is easier to understand for 12-month period. And GDP growth rate was, the target rate was 5.82%. Okay, 5.82%. The target, no, not the target, the actual rate that came was 5.82%, and the target rate was 6.75%. the distinction between Shiva and Shilpo is really fascinating. So people who work in the industries, like let's say garment industry, right? So people that work in the garment, they are providing their service and they're getting a wage, so that falls under service. But the owner of the industry is basically an industrial person, right? The owner, the Shilpopati. And the income that he's generating, which is like manifold compared to the people that are working there, fall under the Shilpo sector, right? And there are only three main primary sectors, and we have discussed that there are 19 ways to count GDP, but 19 ways are like too much. So 19 sectors can be condensed into three main primary sectors, which are like service. What is shit? What's the meaning of industry? Industry, yes. Service industry and agro. So 51% of the income comes from this service. That is a good stat to remember. Like we have to really remember that. And we have been talking about 11% from the agro sector as well. And other thing that we have to understand is like other thing not we have to understand, but we already know, is like 45% of the people belong to the agro sector. So the key thing to remember is, although the majority of the income that we generate, GNI, that we generate comes from Shiva service, people just going and providing or taking service. Majority of the people are still tied to agriculture, and as a result they contribute like 11%, and they have a lower growth, which is like 3.2%. Service on the other hand have 38% of the population, and they do a good job. They like earn 51% of the uh, total GNI, like total income. But the smallest amount of people that add so much to the GDP is the Shilpo, the industry, like 17% of the people only, and they are adding 38, almost closer to 37.9%. And they like grow at a 6.6% rate year to year. So these are like good stats to remember. And like GNI or GDP, I think the 55 national income, দেশের জাতীয় আয়. জাতীয় আয় is national income, GNI, gross national income, and GDP would be like, I think this is talking about, no, this is talking about GNI. This is like clearly GNI written here. Also, another thing is that as we can see, the Krishi, the agro industry is like stagnating. Shilpo one is getting higher, like it is indeed increasing. So we can expect the contribution to the GNI next year surpassing 38%. Could be 40%, could be higher. Who knows? We'll see. And this is a breakdown by the 19 sections that we talked about. Krishi, Bonoj and Motsho, 11%, Khonij and Khonon, 1%, Shilpo, 25%, manufacturing basically, electricity and gas, 1%, Pani, water is 0.1%, Nirman, 9%, okay. Nirman is probably building manufacturing. পাইকারি খুচরা বাণিজ্য, যানবাহন মেরামত 15%, পরিবহন ও সংরক্ষণ 7%, বাসস্থান ও সেবা, okay. And these are like the rest of the thing. So তথ্য 1%, আর্থিক 3, real estate সেবা, real estate like 7 point, real estate is different from manufacturing. That is good to know. পেশাগত বৈজ্ঞানিক ও প্রযুক্তি সেবা 3%, 4%, শিক্ষা, জনস্বাস্থ্য, শিল্প বিনোদন, okay. So all of these fall under Shilpo, and this tantamounts to 38% of the GDP slash GNI. So this is another cool trick to understand or remember. And okay, so these are now exhaustive. So like most, we can assume that most of it falls under service, just like previously, uh, with the exception perhaps with Krishi. Yeah, with the exception of Krishi, just the Krishi is not Krishi does not belong in this particular category of industry. So with the exception of Krishi, all other, the from 2 to 9, so 2 to 9, the 8 subsections fall under industry. And this is like the stat that we talked about. Talks about the distinction between GDP and GNI, talks about per capita income, per capita GDP, and also like does the dollar to Bangladeshi taka conversion, which is cool. Talks about GDP growth rate, which is 5.82%. We talked about that. Income tax 9.4%. We also compared this with the US income tax, then inflation and deflation. He doesn't specify, but we'll try to see what the current rate is. So as you can see, the current inflation rate, base year 2021 2022 is somewhat around 9.05, 9.17, 9.98, so almost in the 9 to 10% region. Okay, these are like just mundane questions. So like GDP, what is the full form of GDP in Bangladesh? Gross mode domestic দেশজ product উৎপাদন দেশজ উৎপাদন. What is gross and like need? Gross is I think mode, so I think number D. Yes, it is number D. Okay, it talks about net national product. Net national product is basically like we have GDP, and GDP minus the expenses would be net national product. But I would wonder like how would we subtract net what would we subtract to get net national product? Like what would be the expenses? Like how do we calculate expenses? Okay, more mundane stuff. So Shikha Babasthan falls under Shiva. Lastly, it talks about a particular book, পদার্থ পরতার অর্থনীতি, Akbar Ali Khan, and the other book আজব ও জবর আজব অর্থনৈতিক গ্রন্থের লেখককে, I think Akbar Ali Khan as well. He talks about books, it seems. Okay, with that we are done with this video as well. He only talked about 16 of the MCQs. I wonder if there are more MCQs, because I thought I was going to get at least 270 MCQs. Okay, this is the third video, or not the third video, but the second video in line, and it starts from 17 and goes all the way to almost 70. So 70 to 70, and this would be the third video that I would watch, but not today. I'm kind of exhausted, and this should be the third one in the sequence, and the fourth overall video that I watch starts from 90, around like 70, 80, 90, and see where it goes to 140, 160, almost 160. And I started with, I think around this time was the first, this is where I started, like at this number I started my first video watch. So this should be the fourth missing part, and once I see that this I should be covering the entirety of the four videos that he talks about, which is neat, which is cool, which is nice. And with that being said, I think I'm going to stop for today.